Hey guys, Mike here. So, boy, I tell you, we got a huge week, not just 1 week, but a huge 2 weeks ahead of us, okay? And this is a jam-packed video with all kinds of information, but I'll just read it off to you real quick what we got going on here. You got Powell speaking Tuesday and Wednesday in front of Congress. That means algos are going to be going off, right? I think you're going to see some huge moves up and down. Could be an absolute nothing burger, but I can tell you right now, a couple words to look for. If he even mentions the word pause, I already showed you what will happen with that one, right? And so it depends on the questions asked, of course, and what he says. You know, he's very political and stuff. So we've seen these nothing burgers before. We've also seen certain words get uttered, and you see these big moves up or down. So no doubt we'll probably see some intraday moves. Then you got the job reports coming out Friday. CPI is not going to be this week, but next week. FOMC in 2 weeks. And then don't forget this one. I'll do some more research to talk about this. But the S&P is going to have this quarterly, basically like rebalancing with the float and everything, and that'll take effect on March 20th. And you're talking about, I believe it is, if I'm not mistaken, $27 billion in orders that will probably be placed to make this happen. And so obviously that could, affect things. Okay, so just understand that it could be a very volatile week or whatever, but they'll probably subtly do that. But just FYI on that one. And so, we talked about ODT options. I'm going to get into something, what happened in 2018, what people were worried about happening again, and really what caused it. All right, I watched a good interview on this. Then we're going to get into the S&P, and a lot of things are going to affect it this week, along with some other stocks to watch, like NVIDIA, Tesla, and things like that. But if you look right here, we talked about this the other day about ODT options, right, and how people are just waiting for it to break the market. And this right here, remember in 2018, if you look right here, there was something called the XIV. It was an inverse VIX ETN, right? And basically one day it went to zero. $2.5 billion wiped out. Okay, and it was on a Monday, if I'm not mistaken. That's what they call VIX-mageddon or Volmageddon, whatever they want to call it. And you can see this is the S&P right here. And look at this drop. Remember, this ain't the Q. This is the S&P. And in one day, on a Monday, it dropped 4.53%. If you look at what it did the rest of that week, you can see this is a big, obviously caused a big move down because the market freaked out and went down almost 8.5% in 4 trading days. And so that's a lot. That's a big move for the S&P. And this wasn't some market crash or anything else. It just happened to be this event. And look at the VIX spike up right here. Look at this right here. In one day, 130% roughly. And then in 2 days, you're talking almost 200% move on the VIX. That is crazy. Again, this wasn't a market crash or anything. It was just a flash crash because what had happened was the Fed had roughly, and I watched an interview with Mike Green that one of our members shared and everything, and this guy, I believe his name is Mike Green. Forgive me if I'm saying that wrong, but this guy's really intelligent when it comes to talking about options. He'll talk circles around you. I had to watch it 5 times. Even the guy doing the interview said, please go back and watch this because Mike's an expert in options, and you can tell when you hear him talk about it. And I've seen many interviews of his. If you've ever seen him, he likes to be the smartest guy in the room. You can tell that. And he's obviously very intelligent when it comes to the market, a lot of experience and stuff. But, when he talks about this, really, which I didn't know this, what happened was the market just freaked out, is that the Fed has stepped in and passed some regulation on Friday. And then over the weekend, Monday comes along and hits, and boom. That's when you saw the ETN go straight to zero, freak the market out and everything else because of the way they were using, just another product to buy, just like we talked about with ODTE. It's been around a long time. I showed you the chart. But, and so Mike was talking about remember, the Fed's always late to the party, right? They're usually there to assess the damage after it's already been done. But if they were to step in and look at these ODTE options, and look at it and start trying to regulate it, that could actually cause this, right? But it could also, you don't need them to step in. It could also happen where you see something like this to the up or down. Most people worry about the downside of it, though, of course. Like I said, if we start getting crazy outside these weekly ranges that the options market was expecting, and also you see crazy hedging having to take place that wasn't supposed to take place, then yes, we could see something insane like that. That could happen, right? And so just be aware of that if it happens one day. We'll have to see. But I just want to make you aware of that and what everybody's talking about from 2018 because, honestly, I'd heard about it, but I didn't do any research into it. So then looking at it, I'm like, wow, okay, well, that's interesting. So now we at least know what everybody's talking about. And it's like anything else. When Obviously, big firms use this more than retail. I think I've seen anywhere from like 6 to up to 10% of retail uses ODTs, depending on which source you're going to. But the majority of it is big money using this stuff, right? And so just be aware of that. That's why the market is not being allowed to move like it would normally move, as you might have noticed, right? And so you're thinking, like, well, how come news isn't affecting it like it used to, or this isn't happening? That's pretty much why. That's what's happening right now, as we showed you with the chart the other day for those who didn't see it. The majority of options now are less than a week from expiring. Not like it used to be where it was 30, 40, 60 days, a year out type stuff. So that's what's happening for now. Things always change, right? We've seen this before with many different things. This will change as well. But right now, people are enjoying it, so that's what we're using, okay? Now going into the S&P, looking at this right here, you can see 2 big green candles wiped out all those losses from last week and this week. And then you can see we're right back in that little wedge right there. And the question is, will we just move straight up? Will we go ahead and achieve and make support out of that double top support resistance area? Or will we reject off of it and come back down? That's really the big key that everybody's looking at right now. And you can see on the weekly, kind of bounce right off that trend line, right? And so that's almost looking at a support resistance flip right there, which is a good thing. But the one thing we got to keep in mind here is seasonality. It's a real thing, right? And look what happened. February is normally pretty rough. Well, we sold off the end of February and the beginning of March. And so now all of a sudden, look what happens. March and April are usually pretty good months. Now, you know me, I like to really look at this, not just look at a chart or something, but this is the average for the S&P over the past 20 years as far as return and stuff. This min return, look at this right here, 12.5% March negative, that is in 2020. That's when the market crashed. Look at the max return, 2009. Guess what? Market bottomed in 2009. That's why you have to take this stuff right here and you just have to throw that garbage out. Always look at the dates, okay? Because if a market bottoms, guess what? Yeah, it's going to look really, really, really good, okay? But I just X that out. What I want to look at is this right here, which is the gain frequency. In March, it's 60%. In April, it's 80%. It's the highest of any month, by the way. 60%, you see there's others that are 60, some are 75. The gains overall aren't huge, but remember, this is the S&P. S&P returns on average 8.5%. So 1 to 2.3% doesn't look much, but you got to remember there's going to be moves up and down throughout the month, and the stocks will be much higher than that, right? Because some stocks are going to be seasonality moving down, some seasonality are going to be moving up. So this is something to keep in mind. And guys, if you get anything out of this, please hit that like button. It really does help the channel. And if you're new here and you like this kind of content, think about hitting the subscribe button. I really appreciate it. And I'm definitely going to be doing a lot of research into the seasonality part. I mean, again, is it a thing? Yes, it is a real thing where it does happen, right? Certain things happen like that. But this year, it's a lot of stuff going on that hadn't been going on, well, probably ever going on in other years. So we'll have to see how that affects it and everything else. We'll have to see if it's going to be allowed to move up like it should move up. And you're fixing to know what I'm talking about when I show you this stuff right here. And that's the options part, right? I mean, this is going to be the weekly options for March 10th. And I mean, just look at how many puts now all of a sudden you have. And I don't look at the put call ratio anymore because of the ODTs and stuff like that, because it's just totally blown it, off course or whatever. But, when you look here, you see a whole lot more big spikes on the put side, starting like 395 on down. Call side, you're like, we got some 400, 410s, but which direction would you want the market to go? And look at this right here, 2.12 put call ratio, which I don't even believe, but that's what it says when you look at the options expiring on next Friday. Now, look at Monday, what's going on tomorrow, okay? And you can see a whole lot of puts to the left right there. It's not as many as Friday because Friday's weekly options expiring, but you only got really one big high level on the call options, right? And so that's something we got to keep in mind. So we know, options run the market. That's just the way it is, right? And so what could happen, though, with options, with these ODTs, you could start seeing more gamma squeezes, right? We've seen it before in individual stocks, which would drive up the market. But, so that's something we got to keep in mind. Again, we got to look at weekly options, okay, or weekly option ranges, not just that. And when it comes to max pain, do not pay attention to that number. Look at more of a range, right? What makes sense for the market? Look at the weekly ranges. These actually, I got people tracking it. I track it. It does work. It makes sense, okay? And also understand, what do we talk about Friday when we talk about the sentiment? It's in the garbage, right? And so when you're seeing a whole bunch of puts roll in, and then the sentiment just shifted so fast to extremely bearish. Now, right now, we're in the fear indicator on the fear and greed index I like to go with. What does the market usually do? A lot of times it does the opposite thing, right? It'll swing the opposite way. Same way when people start to get greedy, especially extreme greed, and calls start popping up everywhere. Boom. right? Look at Tesla. What happened to Tesla? Yeah, all these calls just kept piling in, extremely bullish. They sold it off, right? That's what happens. I mean, it's no shock. Now, looking at Tesla and NVIDIA, right? I'm going to start with NVIDIA. Obviously, you got this ascending wedge going up. A lot of people just wait for this to break. The one thing, don't ignore, doesn't mean it's going to play out, but you do have bearish divergence on the RSI. It's been forming since, look like January there. And so, that's something to pay attention to, because a lot of times that's kind of it market saying, hey, pay attention to this. Now, here's one thing to look at. If you don't know how to do this in TradView, you just type in gaps. It's going to fill these gaps for you, okay? So you don't have to look for them. But you have a gap above and a gap below. People are trying to figure out, are we going to get all the way up here, which would put us right there in that wedge, right? It makes sense to do a breakdown right there around the 258, 260 area. Then below it, what do you see? A huge gap, right? Like around 211 to 225-ish, somewhere in that area. And so, obviously, if the market keeps going and NVIDIA keeps moving up, you can see it go wrap that gap, fill that gap, be a perfect time to sell it off, break that ascending wedge, and go down and fill the gap right below it, right? And then that kind of leads us into Tesla, where you can see right here, I mean, you got one big put wall kind of up there at the top right there, but then you look at the calls, right? And you're sitting here 200, 210, 220, and a lot of people are out there at 240, 250. Look at that, 310, 320. Like, people are buying way out there, right? Then there's that 190. Again, not a ton of them. I mean, 17,000. But, that's really the big question. Obviously, right now we're sitting below 200 and stuff, but what's it going to let us do? Is it going to let us move up? I will say this. There was some big whales buying puts. It was Friday, I believe it was. I mean, a lot. Some big, heavy buying on puts. Now, does that mean they weren't, maybe they're just hedging their longs? Could have been that. Are they expecting to go down? We'll see. Again, I always say Tesla's going to be extremely hard to drive down, but it is a red flag when you see the market move up and then Tesla trading sideways, right? Because you know what I do. People have been buying, they buy every dip. And to see Tesla even having a week like it had where it barely moved when it comes to Tesla, I mean, Tesla has 8-10% days sometimes, right? And to have a day like that where it just sat there on that anchored VWAP right there, that, that's strange. But then look at the whole week. It didn't really make a lot of movement until it gapped down, and then it didn't do anything, right? It didn't rally with the market. So that's going to be something to watch. And then I was talking to you guys about how there's a lot of selling going on and who's doing the selling and who's helping do the selling. And I ran across these two stocks, and this is amazing to me, the amount of the insiders selling these two stocks. I mean, look at the numbers here. This right here is Airbnb. And just in the month of February, they sold a little over $400 million in stock, the insiders did. So they took full advantage of the run up, and they're like, yep, we're going to go ahead and take our money and haul butt out of here, because they absolutely sold the heck out of that stock. And then look at Walmart. Lord have mercy, the richest family in the country, right? These are all sales from insiders right here. And the amount was astonishing. They sold, just in the month of February, 1.4 billion with a B worth of stock just in the month of February. They took full advantage of it. I mean, it must be nice to obviously be the richest family in the world and stuff. And these aren't just family members. These are executives. These are insiders, right? Which obviously is a lot of family members too. But 1.4 billion for you. And then touching on what I talked about, this is going to be your economic data, right? So factory orders on Monday, not going to move anything. But then here we come. There's Fed Chair Powell going to speak on Tuesday. That will also lead us into Wednesday. He'll be doing it 2 days. And then on top of that, you're going to have the JOLTS job report right there below it. That's something people are going to be looking at. Then when you go into Thursday, you got initial jobless claims. You got another Fed speaker who's going to be trying to beat the market down. And then Friday will be a big day, because this you get all the employment numbers, non-farm payrolls, unemployment rate, average hourly earnings month over month, average hourly earnings year over year, participation rate, right? So let me know in the comments, what do you think? Is unemployment rate going to stay the same, go down, or finally go up, right? If things finally started to take effect. And I'm curious to see his testimony, to see what he says, what questions are asked. If it's going to be just a dog and pony show, or are they going to start really giving some harder questions to see? So we'll see. Again, certain words are going to make the market move. That's just the way it is. It may be a total dud for 2 days, because he's extremely political. But I will watch his tone to see, is he trying to make sure he reins in this market, or just let it go? All right, that's going to be the key I'm looking at right here. So let me know what you're doing. Hit the like, subscribe button if you got anything out of it, and I will see you tomorrow.